bring the focus back to the markets like we promised, and two special guests are joining in to chat with us this evening here on Smart Markets. We've got Vikas Gupta, he's Executive Vice President at Arthaveda Fund Management, and Axis Securities MD and CEO Arun Thukral is here with us as well. Gentlemen, both of you, thanks so much for taking time out for us. Arun, let me begin by asking you, many would say that markets, at least off late, are finding themselves in a bit of a consolidation mode now that the post-budget rally, perhaps you agree, is, a little bit behind us. How do you see things pan out for us in the near term?
Okay, so if we are talking about near term, so there will always be some positive triggers and there will always be some negative triggers. So maybe if you look at today's market, we could see the pharma slipping, and because of this US FDA on lupin, and yesterday also there was something on FDCs. So maybe in the near term, for a sector specific, it was a tough time for pharma. There was some profit booking in FMCG, and maybe some breather, you can say, that ahead of Fed meet. But if you look at last few days flow, that has been positive. That's a big positive. If you look at the number, it is 1.65 billion up to 14th March. That is for the month of March. And first 2 months it were negative. So if you look at that, that's a positive trigger. So there are positive triggers, there are negative triggers. So but we are at Axis Securities, we are quite optimistic, because what has happened, the budget has given a feel-good factor. The budget, whether it is fiscal discipline, whether it is thrust on rural and infra, whether it is no negative, basically, if absence of a long-term tax was being talked about, so there was no negative. So these are the things which has given positive, and now Aadhaar bill. So these are the positives in the near term. So maybe we feel that market should consolidate and go higher from this level.
Sure. Vikas, what are your thoughts on the market, especially from the viewpoint that global risks seem to coming back at the horizon? Just today we saw, BHJ meet outcome. In fact, currency market reacted and yen strengthened once again, bringing the entire Asian market lower. You just returned from the Asia trip. What are the investors you interacted with telling you about trading sentiment?
Yeah, so there is a lot of kind of negative sentiment globally, but it's not fact-driven as far as we can tell. It is more of trying to outguess the central banks, trying to speculate on the macroeconomic expectations, and this underlying sentiment that somewhere something is wrong. But the fact is, what is wrong is very clear, or what is perceived as wrong is that oil prices and commodities have crashed. Now you take that as that fear that since these basic materials have crashed, there must be something wrong with the global economy. I don't think that's the case. It's because of the China's extra demand over last decade where the whole upswing had happened. And now China is not doing well. We all know that. It's not doing well. It's unlikely to, be safeguarded. So we will get more and more bad news. But that does not impact the rest of the developed market economies and many emerging markets. Only the ones which are dependent on selling to China, they are impacted.
Arun, what are the triggers you will be watching out for as far as factors to determine the market direction from here on? How are you assessing the upcoming earnings season? Say monsoon will also become a factor, apart from, of course, progress and reforms.
So I'll start with the monsoon, as you said correctly. So we are expecting after 2 years a good monsoon this year, whatever the indications we have received, whatever the predictions have come. So we are very, very hopeful that the monsoon should be good this year. I will not put a number on the FII flows because that number, it's difficult to say at this time. But overall, we definitely look at a positive inflow scenario. And the earning season you talked about. So maybe earning also should pick up, because if you look at over a period of last 1 year, so the government is trying to pave way for ease of doing business. So there is a cleanup happening. If you look at telecom, if you look at coal, if you look at the realty bill now, if you look at banking sector reforms. So if all these things happen, so automatically it will attract foreign capital and the flow will definitely come. So we are very hopeful. The monsoon is positive, the flows will be positive, the macros look good, the reforms, whether you talk about GST, which is going to be a reality, maybe it will take some time. There are some obstacles. But I think over a period of last few months, I think it is becoming clear that it has to be passed, and over a period of time, Rajya Sabha also government is expecting better numbers. So if all this happens, the fund flow will definitely come, and but I will not put a number to this.
Okay, fair enough. Because let's talk about then, the larger picture. If you were to look at a 1 to 2 year time frame, what's the thought you think on Indian equities? Where do you see our stock markets headed, say, vis-a-vis what we're going to see the rest of the emerging market pack to?
See, it's very clear now that this is one of the few large-sized emerging markets which has got a very strong growth and strong and stable macroeconomics. Very, very few emerging market countries have this. And we will see, and this is a thing which I'm seeing consistently from international institutional investors, is the view where they are becoming more and more firmed up for a very long-term focus on India, because now they need to find a substitute for what used to be the China's position for last 2-3 decades.
So, Arun, what is it that you're recommending to your clients at this point in time? What's the best bet here, and what do you think is sort of best left avoided? For example, what's your call on, say, PSU banks and metals? Would you dare to look at buying some of those stocks, or is that somewhere in the neutral list?
So I will not get into the stock specifics. So maybe if I look at sector specific, so we are obviously very positive on the infra because of the recent push, whether it is budget and overall allocation to road projects and all that, infra and capital good. And we are obviously positive on FMCG. Maybe let's say today there was a breather, but if the 7th pay commission and OROP money comes into market, so obviously people are, the urban consumption theme will also grow, and even rural consumption will grow. So this is one area. FMCG, we are very positive. And again, we are very positive on IT. Maybe again, US is doing well, and IT, the numbers are also good. So these are the 3 sectors where we are getting into, and we are telling our clients to accumulate at every dip. And you are talking about banking. Yes, we are as of now cautious. We want to see the Q4 numbers, and as of now we are not recommending to get into banking stocks. And obviously metal and mining also, there are values, but our main focus is on the 3 sectors which I told you. So we are neutral as far as the metal and mining sector is concerned.
Right. Vikas, what about you? What are the sectors which look good to you, and which are the ones you would stay away from?
Yeah, so technology is one of our strongest sectors, where we think there is very good quality, robust balance sheets and huge undervaluation. It also plays into the currency being, on a long run basis, the rupee is depreciating against the dollar. That's likely to continue on the long run basis, and this safeguards you against that. Also, the assessment that the US economy is actually doing quite well compared to rest of the world, and our technology companies are primarily exporting to them. So technology sector is one. Next is consumer goods, and third one are very well chosen, very selectively few strong balance sheets of basic material companies which are PSUs.
All right, Vikas, Arun, both of you gentlemen, thanks so much for taking time out for us this evening.
Thank you.
Thank you.
Thank you. Okay, let's move on, talk about Lupin. Remember, we mentioned about how it was the top loser on the Nifty today. In fact, it tanked something like 7% on news that the US FDA